Good evening, good evening. Welcome to the live Facebook. Now, a little bit of announcement. For tonight live Facebook, I'll be talking about market cycle. Okay, market cycle is pretty important, and it's really part and parcel, just like the what we see in the ocean, where the wave becomes what we call high tide and low tide, and this is all controlled by pretty much of the cycle that we always see in here. So I hope to share with you tonight something on how the stock market cycle will work and how you can use this to do your own timing. Now bear in mind, the market cycle for the stock market does work slightly different. It's not just purely on high tide and low tide, but it works on macroeconomics indicator, which I'll share with you. So hopefully you can re-watch this video again, and it will give you a more what we call insights to how you do it. There's plenty of opportunity, like what I've said on last week in Philip Capital Kuching, a market outlook that I've done for some of the Kuching residents. That is, right now the market is presenting lots of market opportunity. Now many of you may not able to see that, so it's my job actually to review this to you to make some sense about the market in here. Market is not as bad as what you see. There are opportunity if you know how to find them, and definitely having this information will definitely put you in the right track. So let's get started with the market cycle and how we work. And of course, Trade VSA is our company. We are the first digital investment advisor license in here, and we're very proud of it. Our SmartRobie apps continue to make wave where we can give buy and sell call, and right now we're having our campaign, and our campaign will end on the 7th of May, and we still have a new submission today, almost 11% for a real trade for the US market. And if you have not submitted to have a chance to win the Apple iPad 10.9 inches, this is the time for you to be submitting in here. All you gotta do is make sure you have a minimum return of investment of 4% on the real trade, whether it is US market, Singapore market, Hong Kong market, or Malaysian market, which is the Bursa. You can do so in here. Now previously, our past running winner was from Tom, 8.22% made from CRK during the Green Pentagon there. You can see he bought it here, and then he had a quick profit. As I said before, this is not a place where you want to run your long gains, okay? So this is where it's important to have a short-term target profit and put it into place. Now tonight's sharing is about market cycle. We just gave you a short introduction. Now it's important to understand market cycle. It's a bit like day and night, like the moon. You know, we have a full moon, we have a half moon. So it's part and cycle since the beginning of time. Of course, stock market started about 150 years ago in here, and it all really contributed a lot also by people who is investing in here, their emotion, both greed and fear. That's all put into what we see today, right? Just like now we are experiencing in real time that Donald Trump is getting a lot of rebuff or a lot of flag from the market. Stock market is going down because a lot of the policies that he implemented, and he are reacting to it. That's also the investor fear that he has, both the panicking and also the greedy, that he thought that the stock market will go up, and right now he is panicking in that, and he is pulling a lot of the tariff back, and maybe even not implementing all. And now we also be looking in the US market cycle, which is one of the most important market in the world today. And many of you know, who has been following this channel in here with live Facebook, the US market has one of the best return, almost 600% return if you look back, going back to a period of almost 10 years in here. And also I'm going to introduce a new sifu, a new guru from United States, and his name is Howard Marks, and we'll be looking at his market cycle approach, which I'll just introduce you to it, and you can find out more information about it. And of course, we will not back away from our home stock exchange in here, which is the Bursa, looking the Malaysian market cycle. And some of these charts and information that I present to you, you can take it home with you, and it will definitely make you money in the coming months. All right, and we'll look at some of the trend analysis and what does it do as a investment strategy going forward. All right, so let's get started. Now, of course, many of you are very familiar with this. I've shown many times before, which is our market structure. Okay, market structure or market stages, we call it sometimes, and this is always been how we present the market into you, which is the 4 stages. Market, whatever time frame that you see, whether it is minute chart, hourly chart, daily chart, and weekly chart, you will see this 4 phases of the market cycle. It cycles through in time, and it brings a lot of clarity into the market, right? Well, market basically just have 2 directions: going up, which is a stage 2 markup in here, and then coming down, which is the stage 4, right? In between, you're going to have a sideways market, which is actually a stage 1, could be accumulation, and then a stage 3 that you see a distribution. So even with the 3 stages that you have, right, going up, which is the stage 2, going down, which is the stage 4, people still have difficulty really understanding where we are. And sometimes it's important that we just need to sit back, put up the charts, and see where it is going to end precisely. That is what we will be doing tonight, to see where the market is actually heading into in here, the 4 phases in here. And once you are able to master this, right, the market cycle, which actually recognize expansion and contraction. When the market is good, when news are good, markets start to expand out, expansion, that will be what we call a stage 2. And then what we are seeing previously with the tariff, or the threat of the reciprocal tariff, where 24% has been slammed into all the products coming out, the Malaysian products that US will import from Malaysia will be slapped with a 24%. That is seem to be on the contraction side of the economy, because people won't be buying more, and we are already seeing right now at real time what's happening into the market. It'll be interesting to see also tonight how the market will react on the US market, because we have 4 days in a row, and right now what's taking place both in the US market and Malaysia, it's actually part of this market cycle that we talk about. So later on, I'm going to show you a couple of slides down the road here, and you will see how it really falls into place. All right, now if you feel that I'm doing a good job in here, give me a thumbs up. And I definitely want to. Now this is the FBM KLCI chart. Okay, I'm just going to move to the side here. Right at the bottom here is 2025. Here's the 2025. I know it's a bit small, so those of you who are driving your car, make sure you re-watch this again. And those of you who are in your computer, desktop, or reading an iPad or iPhone, that will definitely be helped. Definitely that Apple iPad winning it will definitely put you in the right spot. So we go back to 2007 to 2025, right? So this is a weekly chart from the Bursa, making it very simple. Sorry, a monthly chart, 1 month here, a monthly chart, and you can see the market really, back in 2009, where we got the global financial crisis, the market was around 850, and since pretty much going back to 2025, go back to 10 years, 2005, right? The market is actually down, right? If you go back the last 10 years, going back to even 2022, it's been still around 1,004, and now we are at 153, and we hasn't really gone much. Now remember last week when I talked about the Q2 2025 outlook, check out that live Facebook that I talked about and I posted last week in here. So let's take a look at the market in here, going back to the 4 stages. Our reference will be the market stages, or the market cycle, in this case the VSA market stages. So from 2009 to 2014, from this time frame. So let me just draw this for you here, which is simpler. 2009 to 2014. Okay, this is where we were. Okay, the what we saw was a recovery from the global financial crisis. You have accumulation in here, just a very short inkling, and then immediately the market marks up. There was a big rally as smart money re-entered into the market, and we also have the team, the ex-Prime Minister Najib, were really building a lot of infrastructure. That actually happened after the global financial crisis. A lot of company has made the financial system stronger, and market immediate recover up to 2004. Okay, so that was where we are heading for. And then 2014 to 2018. Okay, so I'm just going to move this if I can. Let me just get this. I just probably have to knock this off first. Okay. Okay, I'm pull this up, and can I move this? Apparently not. Okay, so we'll just draw it again. So from 2014 to 2018, so what we had was 2014 to 2018, we saw a distribution at the top, right? It hit about 1008, which I also talked about it last week, why the market can't go anymore. And the market gravitated between 1600 to in here to 2008 here. That was pretty much the big infrastructure boom that we have. There was a sideways market with increasing volatility, and that was the distribution. We thought that many people were predicting that the KLCI would go above 1009, going down to 2000 and beyond, but it didn't turn up. So that was this period that we saw in. Then came the pre-COVID, right? 2019, we have the COVID. So from 2018, we saw the market took another downturn from here, 2018 to 2020. This was the COVID. The weakening trend was due to political and also the stock market crash during COVID-19. And of course, many countries, including Malaysia, revived, and then everybody was locked down, big interest into the stock market, and that leads to the next phase, all right, which is the accumulation again. So right during that time, everybody was locked down, and KLCI became the talk of the town. So from 2020, okay, to 2021, right, we have another period of accumulation, all right, mini markup in here, a fast rebound, vaccine optimism in here, market rebound, and remember we had the rubber glove industry continue to go higher. At one point it says that we will retest back the 1008, but it never realized, which lead to the next stage, all right, which is the 2022. Now 2022 saw the stock market collapse, right? That was also due to the Russian and Ukraine war that eventually came in here. So that was the market really went down all the way to 1004, and that was the lowest we actually touched on, right? 1004 back in 2022, this mark here, and then retested back on 2023, and then the market we had the data center market came back in a lot more, and then we hit all high just sometime in I believe it was August 2024, and then Trump came in, got sworn in January 20th, and then the market went through this period of uncertainty, which is what we are seeing through. So if you look at market actually go through this cycle in here, 2022 to 2025, where it went down, late distribution, and now it's coming in here. So right now, if you can see from here, what do you see, ladies and gentlemen? What are you seeing here, right? Do we see a distribution? Do we see accumulation? Or do we see a markup from a monthly standpoint? All right, put in your comment in there. I'd like to know what you see right now here. All right. In short, I believe right now we are more in what we call stage 4. Okay, a stage 4, maybe we see the couple of months more sideways market, which is possible going right to second half or maybe third quarter. The market started to pick up and in here. So I want to drill down to my next slide, which actually give you a better representation of the market. So in short, you can see from here, market go through 4 stages, like what we saw, accumulation, and the more modern time, going back to 2020. Thanks, James. Okay, right now we are seeing distribution. Okay, bit of distribution. It might end, then we'll see possible a pickup of accumulation, and then we see a markup in here. So pretty much in a late stage 4, I suppose, in here. Now, of course, talking of market cycle, many of you would have known Tom Williams, but we want to talk about the two gentlemen in the powerhouse of investing, because we're talking about long-term investing, long range, like what we saw the KLCI from 2007 to 2025. We will talk about Warren Buffett. Now, Warren Buffett is the mentee or Benjamin Graham is the mentor to which is almost turning 90 plus. Benjamin Graham is long time already gone. So both of these, which is the father is Benjamin Graham, the guy on the black and white photo. This one is Warren Buffett, everybody knows him. And he's a mentee of the modern value investing. So their mantra has always been looking and paying only for an undervalued stock, which means it refers to the discounted the intrinsic value of the stock, which also in our SmartRobie automatically calculate in. But one of the things, if you look through all their literature and all their books, they always say that as long as the stock market never closes, they are quite happy with it, or it's just open 2 times a day, they're quite happy with it, because they only look at the intrinsic value. But never ever discuss about market timing, market stages like what we did. So that was, I feel that, quite missing in the sense of the overall investment time frame. That's why I want to talk about market cycle, which many of you already know. Pentagon Guider is a way to use it to do your market timing. That way you're in stage 1, get out probably in distribution stage, and the timing part has never really been mentioned at all. So I want to bring in another big guru in the modern era. He's about 70 plus, 72, right? His name is Howard Marks. Okay, Howard Marks, many of you may have known him. If you have not, you can just simply go. So he has this great New York Times seller which came out about a couple of years ago called Mastering the Market Cycle, getting the odds on your side. Now that keyword, right, the subtitle in here, which is a New York Times bestseller, getting the odds on your side. That's what we investor always try to do, right? By learning Pentagon Guider, we want to have the odds on our side. And if you have the odds on our side, like James, I would like to inform you, you are the current runner for the Apple iPad. Yeah, current runner for the Apple iPad. I do hope that you're winning. And this is also part and parcel what we do day to day with our Pentagon Guider, right? So we want to have that edge on our side. So Howard Marks, which is the co-founder and co-chairman of Oaktree Capital, which is worth 2.2 billion, right? So his net return is about 19%, which is very good actually. It's a very good return in here. Maybe not as good as Warren Buffett, which a longer period, but even so, right? What he bring into the table, especially in the education side, it's very valuable, is to understand his market cycle philosophy, which is actually based on pretty much what we have seen in volume spread analysis, the distribution, the markup, the accumulation, which is also based on fear and greed. So Howard Marks' market cycle, in short, that book, if you have a chance to read it, really boils down to what he says, that market cycle really driven by economic fundamental, which I've talked about. I will start to introduce interest rate, and also unemployment. These two very simple, and GDP growth, right? Very simple, so all you would understand. I think last week I talked about GDP growth against the stock market. Not so much for the Malaysian context, but for the US also not much. What really felt has an impact is the US interest rate. So when people start talking about raising interest rate, this is also due to fighting inflation because of the recession, and that's going to be the fear. So with the fear, the market anticipated that will fall, and that's where we see early sell off in there. By understanding also the smart money, by looking at the prices, looking at the volume, the spike of it, you will understand how we are able to time together with the smart money going in. So Howard Marks talks about the pendulum swinging between fear and greed, which is what we see very, very often. Now I'm going to ask the audience, which is more stronger emotion, the greed or the fear? All right, which is the more stronger emotion that you see, the greed or the fear? Right? Definitely is the greed, right? The greed is one of the strongest emotion, and that's why you will see stock market actually fall and collapse faster. It is because of the common denomination among very beginner investor, and then we also saw that during the after the so-called rubber glove, right? Where everybody got into the rubber glove frenzy, and then the market started to break down and fall in here. So this kind of cycle market, and also we saw that in the data center, is inevitable but irregular in timing and magnitude. All right, so we do see cycle. It's just that sometimes the timing may be small, bigger one. So he did say that perfectly timing it is challenging at most, right? So this is why I do recommend to our members using the Pentagon Guide to help you in the timing and also putting in place the market cycle. We actually look into what we already have on our VSA 360, which is the seasonality. All right, so use that one too. So let's look at the US market cycle. Since we're talking about macroeconomics, we're going to start off with the 1929 market crash. And this has always been this big reference. Even Donald Trump or even Kamala Harris say the likes that never seen before, the market will crash. And it frightened a lot of people. So that was the 1929 stock market crash. Then we have the 87. But let's begin back in the dot bubble boom, where the market boom, 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 right? And then it peaked and then finally crashed, okay? So with that, a lot of people have this in mind that, hey, market crash, is it a good time to buy? Yes, the right answer is yes. But will it crash again now that Donald Trump is in power in here? We'll talk about it slightly. So for during the post 2020, we did have a recovery fiscal stimulus where interest rate was cut, and then the low rates are fuel another rally. So just keep in mind, with every market crash, the market actually gone higher, right? Isn't it, right? Market crash, market gone higher. All right, so that's one of the benefits. But the problem is a lot of people don't time it well. They will go in when the market is almost all-time high, right? Usually that's the case it is, because why? It's always easy to invest when everybody is already in the market. But when nobody in the market, when there's so much fear in the market, this is what I talk about investor psychology, right? When so much fear, people don't dare to put the money in, right? Because the fear is going to go down. But that is one of the biggest market gainer that you have. So that's why Howard Marks talk about investor psychology and also the macroeconomics fundamental, which you all investor should try to understand it is. So three variables I'm going to talk about: the GDP growth, the US interest rate, and the unemployment rate. So if you understand this three simple thing, at least you have a bearing in terms of the market cycle in here. Now, definitely what I've talked about in here, pay notice, is the US unemployment rate. Now, like it or not, our Bursa KLSE still pretty much follow the US market. But I have talked before, the Malaysian market has pretty much been the sideways market, and also for year 2025, the KLSE will end in a negative return. Mark my word for that. I will likely to be right more than wrong. I hope I'm wrong. I can be wrong many, many times. But if I'm right, then at least you are already pre-warned before. So if you look back, the key thing now here is the low of the unemployment is always been 4%. You can see 4%. And every time when the market go above the 4%, close to 4.2, 4.3, coming up to 5%, you will see the shaded area, all right? When it hit 5%, okay, let me just show you what I mean here. Okay, I'm going to erase this. The 5% mark, okay, this is where the low interest, the unemployment rate, right, around 4% hit up. So right now, what is the unemployment rate of US? Okay, the unemployment rate of US is apa? Anybody want to guess? This is where the 5% unemployment rate. So if you were to turn on your Bloomberg or your CNBC, as soon as the interest, the US unemployment rate go up, hitting 4.5, 4.6, you will see everybody talk about recession, recession, recession. So this is quite true, right? The 4%, which is this mark, is okay. Right now it's 4.4% based on the trading, what was that? The trading economics, that's right. Trading economics, which is a website. You can get this information. That's where I get from. Also, we had that last recession was in 2020 during the global financial crisis in here. In 2022, the market actually fell a lot. It felt like a recession, but it did not have a recession, not the official one in here, because employment continued to be low, which is the 4% mark in here. But what more important was the impact of the interest rate rise, okay, the interest rate rise, so which we're going to talk about. Now in here, the current US market dynamics, right, we have the S&P 500 versus the US interest rate. Now this is 2025, we go back to 2022, I have a bigger chart with this, just bear in mind, I'm zooming in here. Right now the interest rate is around 4.5%, which is this green line here. Okay, now the post-pandemic, which is actually from 2020 onwards to 2025, the market actually had a strong gain. Okay, have a strong gain, rising inflation, and Fed tightening signaling distribution. So that's where we have the 2022. Then there was a lot of sector rotation going from growth to value too. A lot of technology now, we've seen that if interest rate were to go higher, then we'll see people rotating into industry because tech usually benefit on lower interest rate. So interest rate right now, you can see the US bond yield curve is starting to move higher, right? Because of the risk in the market, people were expecting interest rate to go even higher as they raise it. We are planning for inflation because egg prices are going up in US. So they are predicting inflation rate to go up. But then Donald Trump came in and told on his Truth Social that he wanted to fire Jerome Powell. I think many of you heard of that last week. And as such that the news actually make the market collapse to right now about 5,287 in here. So right now you could see the green line here is the interest rate. So at one time they were talking about cutting interest rate, but not sure yet, right? Because inflation still not in being controlled here. So here I want to share with you is the seasonal month. After we share with you, this is from a Trade BSA. So you can see here January, February, March, all the way to December. And this is usually the seasonally return, right? So you can see the strongest month. Use this to your advantage. So that's why I said we are really in the month of April going to May. So we can see the market started to recover, which is true. March was the lowest point. You can see here, March, let me just delete this and use the pencil here. So March was the lowest point here. Then if you have April, May, that is going to go all the way to August. So we're going to see a nice boom in the US market. Now, James, remember, this is important. This April to end of August, which is very similar to what we see last year. Then we'll see a dip. So the strongest month will be November and December show the highest percentage gain. Okay, December month here and the November month is the highest percentage gain. Summer surge, this is where the summer is, May time frame here. Usually the stronger rally. January to March see the lowest perform, which is correct. What we saw, right? January to March will be the lowest in here. So it does follow the so-called last 10-year cycle. Okay, so keep that in mind. This is important. So right now, members, those of you listening, you know you need to be in the market because we're going to have a nice upswing right now. April, May, June, July in here. That's where you want. So if you are listening right now, you are on the sweet spot. Okay, now we turn our attention to the Bursa KLCI, which is totally different, right? Bursa KLCI is like that, okay? US one is zoom up, but Bursa is like this again, over last 10 years, okay? So you last back, first of all, the challenge is the last 10 years we'll look at. So we look at July is the peak, also same as last year, and which is quite true. March, April now is coming to, I think the monthly VSA tour is slightly coming to, going to be positive soon. It's still minus 0.8. Then you have the April. If month of April, then May will start to go back down again. Lowest point will be June. So May is going to be a down. Then we'll see for Malaysia market, better to go in June. June, July, and until August. 3 bulan saja. July is the best month. June and November is the dip, which we saw in November. And then December we see a rally. Actually, even last year rally, only 3 days only of that rally in here. All right, so keep in mind, this is the KLSE market cycle in here. I don't expect you to remember this, but if this is on the back of your head, when you invest it, you'll do much better. Doing it together with the Pentagon Guide, which means in June, you want to be trading all the way in August because that will definitely give you the best kind of return in here. And perhaps in September, you want to avoid it in October. And then finally, October have a small pull up and then finally the November and the December. Okay, all right. So that's the real message that I want to turn on to all of you who are listening here. And then the question people ask is that, will there be a recession in US in 2025? Of course, recession always followed by sharp rise in unemployment, which I talk about the 4.5% going higher to 5%. That's the one in here. But as of 2024, we are not seeing a big spike. So you can see here, the gray color is the interest rate. The blue color here is the unemployment rate. So the unemployment rate now is still steady at 4% in here, right? No major spike yet, no clear recession in here. But of course, with the Donald Trump firing of the government worker by Dodge, the fear is that many people of this will go out and claim unemployment. So when the unemployment rate goes up, that's why there is a possibly almost 30%, 40%, 50% of recession in US, depending here who you hear it from. But right now, officially, there is no recession pattern yet, right? The post 2022, okay, you can see did signal economic cooling, right? Because of this sharp interest rate movement that you see. So if you go back to the previous chart here, right, and you can see where interest rate, right, this was the interest rate rise, right, and you can see this interest rate rise, this is where the market actually collapsed the most. You can see here, right? It collapsed the most. As it go higher, it sort of taper off, and then by the time it flattened out already, the market already moved ahead. So that's why you can see stock market move ahead of the interest rate. Interest rate going higher, but market seems to signaling almost up to 6 months. Once it flattened up, you can see the US market start to shoot up. So when this market goes up, that also means that interest rate will come down. You can see when thing goes up. So that is the very interesting observation that I have in here. Okay, going forward. So if you based on that, all right, based on here on the unemployment rate, no clear signal in 2025 and beyond yet. Maybe 2026, because every time when the market dip below what we call the inverted yield curve, which I'll share with you here. This one later here. I'll come back to this one. So let's go on to the next one is the US market versus the US interest rate. So in this US market interest rate, you can see the green line is the interest rate and the blue line is the S&P 500. Whenever they cut interest rate, you can see 2022, which is during the COVID one, that was the best. You can see rate hikes hurt stocks. Okay, 2025 right now is a pullback, drop at 4.5%, which is the US interest rate, 4.5% in here. So it's just cautioning only here. But if they cut interest rate, the market go back, or will Trump to hold on to his tariff or even reduce it, you see the market cycle, which is going back to the earlier chart, which I show you just now here for the US market. You can see June, July in here. Remember the 3-month pause on the reciprocal tariff will be up to July, which is also mean the peak, correct lah? So right now we will see market started to go up. So no surprises, a lot of your stocks all start to move up, and you want be gangbang, be in the market in here. Okay, let's look at S&P 500 with the unemployment rate. Just now we just saw it. COVID, we saw a big spike, which is the unemployment rate, which actually goes up to almost 15%. So right now it's at 4.2. Sorry, earlier I talked about 4.4. It's only 4.2. Only when they get on to 4.5, touching 5, recession will come on. The 5% recession will come. But right now we haven't got it, because this is also caused by the interest rate inverted yield curve, which I'll show with you. So 2023, 2024 unemployment was rising. S&P pullback is a sign of market caution, but also another market opportunity going in here. Now let's talk about the yield curve, which is also termed as a treasury term spread versus the recession probability in here. We have the inverted yield, which is on March. So you can see here is a 0 mark here. Let me just remove all this. So every time when we have this 0 mark here, once it go below here, these are all we call the inverted yield curve. Okay, inverted yield curve. So whenever you hit here, go back up. You hit the below 0, go back up, you got recession. Recession. Here, touch here, but recession are almost 12 months, 12 bulan. So right now the market hit here again. This is where last year inverted yield. Didn't happen. We didn't see any inverted yield curve. That was in 2022. Right? So 12 months in 2023 tak dah. So now you hit back up here again. It retest back, you hit up and then coming up, test back in. So that's why people talk about recession now. The recession now right now is about 30%, right? Because every time when you hit what we call level above 20% here, this one 20% in here, which is this level in here, you will see recession. Recession probability historically is below 20, usually precede downturn. Okay, when you go above 20%, the recession probability, you'll see downturn. Okay, right now it has. That's why you see many people talking about it. Okay, so will it happen in 2025? I doubt it, but 2026 is possible. But when it comes to 2026, I'll be here to explain to you on 2026 again, early in the year. Because if you are watching me and I, as much as passion, like to report how the macroeconomics works together with the timing, you will definitely get an edge, just like what Howard Marks said in his book, getting an edge on your investing. So the pattern is, yes, there will be recession coming. We do not know 2026. And even if it does, it will be a very short one, because right now there is adjustment on interest rate, right? Let me just let you know. Now the last couple of interest rate, what they did, right, is the market, they just cut interest rate. Let me show you here. Yeah, you can see here, right? When that was happening on the COVID, they were around 2.5, they cut to 0. Right now is close to 4.5%. So they can cut 25%, market will still go. So there's a lot of petrol to put into the stock market. If they cut interest rate, means they're pouring petrol to the stock market, it can go higher, right? So again, use the monthly seasonal S&P 500, which I share with you. They will time you well. So right now it's at 30%. Yes, probability of recession got, but not this year. Okay, so in summary, okay, follow the cycle, don't follow your emotion. Those people who follow the emotion, especially during the COVID buying at the high, all kena wipe out. Habis, hangus. So apply the Howard Marks cycle thinking, accumulation during pessimistic, which is also similar to the VSA in here, reduce. Watch out for key macro, which I talk about the employment and interest rate for early sign of market. Seasonality work for the US market rally in November, December. Bursa is strength in July and December. Time it accordingly. Use the Pentagon Guider. Federal Reserve, don't fight it lah. Show habis one, right? And then number 5, diversify, right? If you are already in the US market, congratulations, wonderful. If you are not, I think it's back time to even rotate and put some over there, right? Use this information that I presented you to your big benefit, right? Remember, Bursa KLCI usually show third quarter weakness just after the August, September and October market usually come down from here. And then July will be the high spike. We're not in July yet. We got 3 more months to go, and use that to your advantages. Remember, year of snake, which I talk about every Wednesday, not so good year. And the same goes for the KLCI. If we hit sometime in July, take your profit, and then the market's going to come back down, probably in sell-off in November, and we will likely to get a negative return. So right now, okay? So any charts that you want me to look at, feel free to let me know. I'll take a look at it and figure out for you, see how is it go. But as usual, right, my special thanks to Tom and also James, who is with us tonight in here. You are standing in, running for the iPad for our SmartRobie Pentagon Guider entry with real money campaign in here. Thank you for coming. I think you'll learn something new, right? Remember the algorithm Pentagon Guider, which uses the market stages, and tonight having the seasonal and introducing 3 new element macroeconomics using the US interest rate, using the unemployment. You are definitely getting odds on your side, right? Of course, Pentagon Guider, which is our patent product, right? And I'll probably end here. Don't forget to extend or join our premium membership for more information that we talk about in here, right? And our stock market information telegram, so make sure you join us there. So if you have any question, so and so forth, feel free to pencil into the comment. I'm happy to share with you what I think about the market. If not, thank you for watching tonight. And I'll be away for 2 weeks for short holiday. So the next 2 Wednesday I'll be away. So same goes for our Monday live stream. So next Wednesday, no live Facebook. So hopefully this market cycle will help you to time your entry plus the Pentagon Guider, make you a better and informed decision making, all courtesy of Pentagon Guider algo. Bye bye.